You had 5 names that are up 300% in small caps this year. Is this too far, too fast?
Well, it's certainly aggressive. We've seen some bold moves here in the Russell 2000, and you can look at it just comparing the big indices. S&P 500 up 4% year to date. Russell up about 16%. Huge discrepancy there. And I think we are really seeing optimism flow through to these small cap names from the stimulus package that people are expecting. And also, these are the businesses that people thought would get left behind. They haven't benefited at all because the businesses are seen to be more domestic focused, more tenuous. They also have in that index a larger service component. So this is really showing the confidence that reopening trade is happening, and those industries, those companies that have been really out of favor are coming back into favor with a bang.
Yeah, and they are, Matt. And listen, with all due respect to the Reddit rebellion and the army of Wall Street bets traders out there, this is not just going to be a bunch of couple million individuals throwing some money at it. This is institutional capital, whether it's Vanguard, BlackRock, Fidelity, being redeployed into the value and the small cap sector in a massive way. Is it not? And how long do you think this might last?
Well, I do agree with you that, these are indexes and these are stocks that really were underperforming before the pandemic. And then when the pandemic hit, obviously they got crowded out. It was tough to get capital for some of these guys. And so they became really undervalued in a way. And what we're seeing is, with the accelerant of the Fed, pouring money out there, as well as the stimulus going on, people are redeploying their capital and they're looking at the small caps, which still today are less valued, lower valued than the large caps to a degree. And given the fact that they're probably not going to be in the regulatory crosshairs as much under the new administration, they're more domestic in nature. So as we open up the economy and the American consumer who doubled their savings rate, more than doubled their savings rate to historically high levels last year, starts to deploy and buy goods, these companies stand to benefit.
Yeah, Susan, just to expand this out a little bit, when we talk about the small caps and the reopening play that they represent, it's also part of this bigger, broader reflation trade that we see afoot right now. Is that here to stay? Are there other ways, in addition to the small caps, that investors should be thinking about playing it, if so?
Well, I think it is here to stay because I think this optimism is showing that it just won't go away. Remember, 2 weeks ago, we had, a definite drawdown in the market where we had things down, 3-5% in the big indices, and yet it sprang right back last week. And so we're seeing this sustainability of confidence, really. And I think it boils down to that. We're seeing consumer confidence, and that is confidence that those consumer balance sheets, which are in pretty good shape, are going to be put to use as soon as we can go back to a normalized economy. And so I think you do have to look at the service sector. I think it's not just small caps that are going to benefit from this, but I think the small cap index is showing you that they're going to feel it the most because, again, they were the most neglected last year.
Shepard Smith here. Thanks for watching CNBC on YouTube.